Here we go again then. UK fiscal risks are back with a vengeance, with less than 2 weeks to go now until budget day. Frankly, it looks like the entire thing is in tatters if overnight press reporting is to be believed. The Financial Times breaking the story late on Thursday night that Rachel Reeves has scrapped plans to hike the basic rate of income tax by 2p at the budget on the 26th of November, fearing effectively a rebellion among her own MPs, and also obviously noting that such a move would be deeply unpopular with the electorate. I imagine that the rather grim Q3 and September GDP data may be playing a role in that as well, given that a further hike in income tax is only going to slow consumption growth even more. Of course, UK assets very much taking it on the chin this morning. Gilts selling off aggressively across the curve. The 10-year has just opened up by about 13 basis points, the same on the 30-year, which takes benchmark yields effectively to their highest level in a month or so. And really, we see UK fiscal risks resurfacing now because market participants are questioning, with basically 10 days to go until the budget, how are you going to balance the books? We all know that there is a 30-odd billion pound black hole that needs to be plugged. We all know that the Chancellor is unable to borrow anymore. We all know that the Labour Party, her own MPs, are not going to vote for further spending cuts or any spending cuts. So in many ways, while an income tax hike does bring considerable negative effects, it was sort of the best of a very bad bunch of options. And I think market participants are now concerned that if Rachel Reeves is instead going for a sort of smorgasbord approach of very piecemeal and small tax hikes, frankly, you're probably not going to raise the amount of revenue that is required to plug the gap, to bring the books back into balance. And as a result, that raises the risks that this fiscal doom loop that we seem to be stuck in of another round of tax hikes every 6 to 12 months, that doom loop is only likely to continue. Of course, it's not just gilts that have taken it on the chin. The pound trading softer as well, cable down by around about 0.5%. Frankly, I think it's still a miracle that we're trading with a 130 handle. I would not be at all surprised to see further pressure on the quid as we move through the remainder of the day and perhaps into next week as well. And actually, that's going to be key. I think now market participants' focus really turns to the Sunday papers. Traditionally, we get a lot of news in the run-up to the budget in the Sunday papers here in the UK. Focus is going to be essentially on the question of how are you going to raise the revenue that you were going to get from the income tax hike, and unless and until Rachel Reeves can provide a convincing answer to that, then I think the path of least resistance for UK assets at large leads quite clearly to the downside.